Fixed index annuities, or FIAs, are financial products that come with their own potential set of pitfalls and complexities. It's important for anyone considering the purchase of an FIA to understand the intricate terms, conditions, and features. FIAs pay some of the highest commissions of any financial product, and the disclosures are often buried in 175-page contracts. This is why we believe most FIAs are sold, not bought. Before you make an expensive mistake, let's review some of the basics around FIAs. An advisor isn't a fiduciary when selling a fixed index annuity. There's a regulatory loophole that tilts the table in favor of the broker selling fixed index annuities. Regulation Best Interest, or Reg BI, was implemented by the SEC to make sure that financial advisors are serving clients in their best interest when dealing with securities. However, FIAs aren't securities. They're insurance products. What does this mean for you? Any financial advisor recommending an FIA is not bound by Reg BI and is not working in your best interest. Instead, these advisors follow state insurance regulations. These regulations allow advisors to recommend FIAs that pay them the highest commission, rather than being the best solution for you. Remember, when an advisor sells an annuity, they are not a fiduciary. Additionally, some advisors may operate two different businesses within the same firm. These firms may have an RIA that allows them to do financial planning, usually for free, as a way to attract potential clients. When developing and preparing a financial plan, they're fiduciaries. Conveniently, the advisor also sells FIAs. Firms like this make most, if not all, their revenue from the sale of fixed index annuities. This creates confusion for consumers because it can be difficult to know when the advisor is working as a fiduciary and when they aren't. Here's what you should know. Your advisor is not a fiduciary and not working in your best interest when they sell you a fixed index annuity. The regulations allow an advisor selling a fixed index annuity to have a conflict of interest, often disclosed in fine print. This permits the advisor to sell the product that pays them the highest commission, not the one that's best for you. The annuity product need only be suitable, not the best. Fixed index annuities aren't risk-free. I see some advisors claim that FIAs are risk-free.
So in my mind, when we're putting money into a fixed or fixed indexed annuity, we're really not investing the money because we can't lose it.
This is simply not true. Here's an example. Annuities transfer investment risk to an insurance company, and insurance companies can become insolvent. In just the last 5 years, 9 insurance companies in the United States have become insolvent. And many people remember the large insurers Conseco, Executive Life, that went out of business several years ago. The North Carolina Life and Health Insurance Guarantee Association offers protection, but only up to $300,000. Here's an example. If you bought a $1 million FIA and 1 year later the insurer became insolvent, you'd only be guaranteed to get up to $300,000 of your money back. An advisor claiming that FIAs are risk-free is either misleading consumers or is woefully misinformed. Either way, that's a major red flag. Another problem with FIAs is that there's no fee transparency. Unlike mutual funds and many other investment offerings, it's very difficult to understand what the fees are of an FIA. Is it really a good deal for you if you can't determine how much the investment costs or how much the advisor selling it is getting paid? You'll need a PhD to understand FIA crediting rates and riders. Buried in the 175-page FIA contract are details like caps, participation rates, investment indices, and riders. These contracts are a maze of complexity. Many advisors selling FIAs recommend riders. These are additional policy benefits that come at a cost. Two of the more common FIA riders are a lifetime income rider and a death benefit rider. The cost of these riders vary, but they are typically 1 to 1.5% each. The fees for these riders lower your crediting rate in the annuity, reducing the value of your investment. Warren Buffett says it best: the more complicated an investment is, the more likely it is to benefit the person selling it. What about lifetime income? Sellers of FIAs like to promote the concept of income you can never outlive. Seems appealing, but what's the catch? Well, to get lifetime income, you must annuitize the insurance contract. This means that you agree to a series of monthly or yearly payments for the rest of your life and perhaps your spouse's life as well. But once you annuitize, you give up the option of taking a large distribution from the annuity. If you needed $30,000 or $40,000 from the annuity to buy a new car or to put a new roof on your home, you cannot get it from the annuity if you have commenced annuitization. The other downside to lifetime income is that it doesn't keep pace with inflation, and you will lose purchasing power over time. For example, if you commenced annuitization, it took $35,000 a year. 15 years from now, you'll still be getting the $35,000 a year. It hasn't been adjusted for inflation. And your purchasing power has probably been cut perhaps as much as 50%. This can be a slow boat to poverty, one that you don't realize until it's too late. FIAs are financial quicksand, easy to get into, but hard and expensive to get out of. Most FIAs have expensive surrender fees of up to 15% to get out of the policy. And these surrender fees can last 10 or 15 years. We recently worked with someone who had been sold an FIA for $1.5 million by another advisor. After 2 years, his FIA had only grown by 3%, and he decided to exit the contract. But he incurred surrender fees of over $180,000 to do so. Don't make this expensive mistake. Some annuity providers offer a premium bonus. If your advisor touts the free money available through a premium bonus, ask yourself this: why is an insurance company willing to give me so much money to buy their product? Could it be that they know they'll make the money back in fees? If you put your money in an FIA, you lose flexibility with regard to how much and when you can take money out. Most people who invest in FIAs don't realize this until it's too late. FIAs can be right for certain people in certain situations. But in our experience, far too many people are sold FIAs without fully understanding the expensive penalties to get out of the investment. At Ark Royal Wealth Management, we believe in complete fee transparency, and we always and only serve you as a fee-only fiduciary. No gimmicks, no misdirection, just sound financial advice. We invite you to give us a call if you'd like to learn more about how we can help you make the most of your money.